Let's deal with a situation where we make a GST settlement payment of the GST clearing account. That's probably going to be the most common situation. What does that mean? Well, that means the GST clearing account can have a balance that is a liability, and that's probably the most common case. So what would happen here is we assume GST clearing is a liability. It goes up and down as a liability. So in this case, when we make sales or charge GST to customers, so for cash sales and credit sales, we can see there's 6,000 on cash sales of GST, and 4,000 on credit sales. That's a total of 10. Let's just give these some dates. We just made these dates up. They're not important for this, but that would increase our liability. So that will go on the credit side. And we now owe the government $10,000 because as a business, this money is not ours. We've either got it already for cash sales or we'll get it in the future with credit sales, but it's not going to belong to the business, so we're going to have to give it to the government. So that's why that's a liability. However, we get to take out all the GST that we've paid for or been charged. So like on our rent, insurance and inventory. And if we put that in, it was 900, 100 and 7,000. That would decrease our liability because the government says don't give us 10,000 because you've already paid, in this case, 8,000. So really what would happen here is we would balance this ledger, and we always balance a ledger by adding up the bigger side. So in that case, this would be the two credits here. So we'd add them up and say that's 10,000 there. And then we put that on the same line on the other side. And then we subtract away the 900, the 100, and the 7,000, and we'll write 2,000 there. And we'll put the word balance and say at the end of January, that's the balance that we need, and then we carry that down for the first day of the next period. So on the 1st of February, the GST clearing account would have a credit balance. And that's what makes it a liability, because liabilities have credit balances. So what does that mean? Well, that means that when we go into our balance sheet, that's going to pop up here as a current liability called GST clearing for 2,000. And just like if we had a loan or accounts payable, they're current liabilities, we're going to have to pay that. So what we say is that that's a liability. Why? Well, let's go through the definition. Because there's a present obligation. That's the first part of a liability. What is the business obligated to do? They're obligated to settle or pay the Australian Tax Office, which we'll call ATO, for $2,000 GST in the future. It's always within 90 days. So that's why it's current. We don't need to know that. We just need to know that it's current. What else makes it a liability? A liability is when you have to transfer an economic resource or benefit to another party. Well, in this case, to settle that obligation, we're going to have to transfer the ATO cash. So the economic resource that we have to use to settle most of our liabilities is going to be cash. And lastly, it has to arise as a result of past events. What does that mean? Well, it means that this obligation, this liability, occurred as a result of all the transactions that had GST during January. And that's why that's a current liability. So the point now is, well, we're going to have to pay that. So here we've got our GST clearing liability. We just sort of got rid of the January transactions because we balanced it into February, and we're going to have to pay that, just like we would any other liability. So what that means is here's our business. Here's the government or the ATO. We're going to have to give them $2,000. So let's say that happens on the 21st of February. On the 21st, a GST settlement payment is made to the ATO for $2,000. Now, the first thing that's going to happen is our GST clearing, which is a liability in this case. It is $2,000, but when we pay it, that liability goes down. So when a liability goes down, that would be a debit. How are we paying this? We're paying it with cash. Cash is an asset, and because we're paying cash, cash is going down. The rules of debits and credits say when an asset goes down, that would be a credit, and our debits match our credits. So just before we put it in the ledger, we should always check that this sort of makes sense in terms of the accounting equation. So we've got assets equals liabilities plus owner's equity. Let's take this first one. We've got a liability going down called GST clearing 2,000 there. And here we've got an asset called cash going down 2,000 there. So if we balance all this out, assets went down 2,000. That should equal liabilities, which went down 2,000, plus owner's equity when nothing happened. So that's zero. So our accounting equation balances. So now we can move forward and say, well, how would we put this in the ledgers? Well, we're going to have a GST clearing ledger and a cash ledger. So let's take this one sort of entry at a time. Let's go to GST clearing on the 21st of February. Make a debit here of 2,000 here. So we'll do the date, 21st of February, and a debit of 2,000. Let's go to cash and do a credit on the 21st of 2,000. As always, I'm doing the referencing last. You don't have to do it that way, but I just find it easier because now I'm going to go and say, well, all right, here's a debit in GST clearing. Where will I find the matching credit to this? It's in a ledger called cash or bank, cash at bank, whatever it is. They're all the same. You're going to get full marks no matter what you call it, okay? All right, what else? Well, I've got to go to cash here. There's a credit of 2,000. Where will I find the debit? I will find it in an account called GST Clearing. And there we go. And what we can see here with the GST Clearing account is it had a balance of 2,000 as a liability, and I paid it, so now it's zero. So what we say is that GST account has been cleared out, and that is why we call it GST Clearing. However, just a couple of things to note. You can kind of think of this as similar to when we pay an account payable. So let's have a look at what we just did. We paid a GST settlement to the Australian Tax Office. So what we did, we had a liability with a balance on the credit side. What about if we paid an account payable? Well, we'd also have a liability. It would be called accounts payable though, instead of GST clearing. But let's say we also owed them 2,000. Well, what would happen when we paid that? We would do a debit to the GST clearing account, and we'd do a debit to accounts payable. What do you pay these liabilities with? You pay it with cash. So when we settle the GST account, it's a credit to cash. And when we pay an account payable, it's a credit to cash. So we can see this is the exact same entry. We're just changing the name of the liability that we're putting the debit to. So in this case, it was GST clearing, and in this case, it was accounts payable. And that's pretty much everything we need to know. There's just a couple of little things to look out for with different questions. Sometimes the GST settlement payment may be made after other transactions have occurred during the period. So with that previous example, we said, well, we owe the government 2,000 and then we paid it straight away. But what might actually happen is during February, a whole bunch of other transactions might occur like this. Okay, and by the time the 21st of February comes along, which is when we settled this, there's a whole bunch of other payments. That doesn't matter. We just put it down here in date order. And we say, there we go. There it is. That is the settlement payment to clear out the original balance. So the balance is actually 1st of February, but really that's the balance from January, and we're settling that on the 21st of February. And just finally, other thing to look out for, sometimes the GST settlement payment may only be a part settlement of the amount owed. So in the real world, businesses can't always pay the full amount back. Like, this is only $2,000, so that's not such a big deal, but maybe the GST liability is $75,000. That's a lot of money to find at once. So what the tax office says is, all right, a whole bunch of other transactions happen. They'll let you settle it, just a bit of it. So in this case, we call that a part settlement. So we can see here on the 21st of February, the settlement was only $1,700 of 2,000, and the tax office would say, give us the other $300 in the future. So that's just the other thing to look out for, and that is called a part settlement, when we settle only a fraction of the opening balance from the previous month.